All right, I think we're live. So, welcome back to Bitcoin.com's The Weekly. I'm Graham Stone, joined by David Sencil, and let's get into the weekly recap of the biggest stories in the Bitcoin and cryptoverse. We got a new all-time high. Bitcoin has hit a new all-time high. If you have not been living under a rock, you would of course know that. It traded as high as $125,725 over the weekend before pulling back as low as 122.6. And at the time of recording, we are at 123 and a half, 123, pushing 124,000 dollars right now. Interestingly, um, aggregate futures open interest figures, as collected by CoinGlass.com, touched an all-time high near $91.6 billion, which is a sign that traders are adding risk here in this rally rather than taking profits. Translation: the casino lights are on and the chips are stacked high. Another interesting point to note is that in this rally, Bitcoin dominance has inched higher. Actually, it's been pushing high since early September, where the bottom on Bitcoin dominance was 50%, 57% of the entire crypto market cap, and since then it's pushed up now close to 60%. And we also have, over the last 5 days, about $3 billion in Bitcoin ETF inflows. So new all-time high.
Yeah.
Everyone
Meanwhile,
celebrate.
yeah. Meanwhile, this is all in the background of the U.S. government shutdown,
Yeah.
kind of brouhaha of last week, and how that actually didn't seem to matter or mattered. It actually helped, perhaps. So, interesting developments there. I would say that the Bitcoin dominance piece here, the fact that it has bounced, to me, is actually an indication that we could have further downside, actually, right? Like it bounced nicely, and then it'll probably cap at some point. You'll get like a lower high, right? And then down more is what I would expect, having been wrong about Bitcoin dominance earlier this year.
Care to speculate on where it would the lower high might be? I mean, up as high as 63%, perhaps.
Not sure. I mean,
Half. Yeah.
I think it does depend a lot on if Bitcoin gets a decent focus, like if attention does turn to Bitcoin in the short to medium term, right? Because once Bitcoin starts to move, as we've talked about before, it'll just suck the liquidity out of everything else, and then you'll see dominance go up even higher. But if this kind of all-time high run here, it peters out soon, then you'll see this roll over, and I imagine it'll roll over hard. And I feel like the Solana ETF slash DAT meta is just like waiting in the wings, right? It really hasn't been given breath to run hard yet, right? Kyle Samani just has had Forward Industries get some attention, but my feeling is when the Solana ETFs come out in the next couple weeks, maybe a month, but probably sooner than that, you'll see the perfect setup for a Solana run, and then the whole Solana ecosystem will run, and that would probably signify Bitcoin dominance kind of rolling over and going down. But again, that's all speculation. I have no idea. It does depend on what Bitcoin wants to do from here.
Yeah. All right, let's move on to privacy coins. There's been a lot of talk about privacy coins over the last few weeks. David, can you give us the rundown?
Yeah, so anyone who's familiar with token narratives, or perhaps even this show, knows that I love privacy coins, love privacy. And I have been heartened by the fact that privacy coins have been kind of on a quiet tear for the past, I don't know, 5 months, 6 months. In May, Bitcoin.com news reported that the privacy sector as a whole was advancing So this is 5 months ago. It was led by Monero, Zcash, and even new entrants like Xano. And so we talked about it 5 months ago. Since then, privacy coins have continued to see an uptick, both in, I think, attention and in price. Those things kind of usually go hand in hand. So I think right now it's safe to say we're in a bit of a privacy coin season, mini season, small season, who knows? But the way that these coins have been moving recently really shows that it's captured the attention of people. Zcash, which is a privacy-focused cryptocurrency, has been the focus of this little privacy coin season. It's had a 60% surge within 24 hours on October 1st, reaching a yearly high of $124. This is its highest or strongest price level since May of 2022. And over this preceding week, Zcash's value has more than doubled, making it one of the strongest performers, not just in privacy, but in all altcoins. There are a couple of reasons behind Zcash's outperformance. The first is ThorSwap integration. So ThorSwap announced support for Zcash, enabling direct swaps between Zcash and Bitcoin. Obviously, this is really, really important for privacy coins, as centralized exchanges, major centralized exchanges, are like they don't really want to touch these privacy coins for regulatory reasons. So you need to find alternative ways to swap in and out of these assets. And so ThorSwap adds kind of an easy way to do this. The second is Grayscale is launching a Zcash trust. So again, you have this kind of institutional way to get some exposure to Zcash now in a regulated security format. So again, very, very strong moves. Then from the community side, there's been a lot of grassroots support for Zcash that I have noticed for months. I first noticed it from Vlad Kostia of the Bitcoin Takeover podcast. Shout out to him and his podcast. Vlad is an OG Bitcoin crypto person. He values kind of these I don't know, old school crypto ethos, like, you know, quaint things like decentralization, transparency, immutability, privacy. And he has been advocating for Zcash for quite a while. And recently, you should check out his X feed. He has definitely been happy and cheerleading Zcash's kind of price appreciation and subsequent like renewed interest in it. But you've also had people like Mert, the outspoken kind of ex-post god and Solana ecosystem cheerleader. He's the CEO of Helios Labs. He's also been a pretty big Zcash bull for quite a while. I've seen him on my timeline talk about Zcash and how it's kind of better or at least undervalued relative to Monero. So he's also been quite happy with Zcash's appreciation. And then Naval Ravikant has also been on the Zcash bandwagon of late, calling Zcash an insurance policy against Bitcoin. This is similar to what Vlad Kostia has said about it too. So yeah, you've had a lot of Zcash. What do you say? Reasons to buy Zcash, I would say. Now, Zcash is certainly capturing all of this attention, but it isn't the only privacy coin doing well. So on October 2nd, Bitcoin, as we all know, crossed 120K for the first time since mid-August. During this time, privacy coins experienced a major rally, and this rally was nearly 10 times higher than the rest of the crypto market. So relative to the rest of the market, which was doing well, the privacy sector did even better. And the whole privacy market went up about 21% during this time. As we mentioned, Zcash was up 130% month on month, 20% in a single day. Monero climbed to $340, its best level since July 2025. This is a gain of nearly 13% since late September. And this is all after Monero had a sustained attack on the network. So again, a fairly good reaction to that, I don't know, test, if you will. Dash, another privacy coin, gained about 5% in 24 hours, 61% in over a week. Very, very, very good for that. Other privacy coins like Decred and Verge posted double-digit gains, 21 and 43% respectively for the week. So again, you're seeing pretty good gains for the past week or two. Does this have legs, Graham? I don't know.
I don't know, but maybe two things to bring in here. One is if you're looking to speculate on this, you might want to look at privacy coins that haven't yet pumped. Maybe Zano might be one of those, but that's one thing. And then on the question of whether this thing has legs, maybe one interesting thing to note, which is that I noticed there was a little back and forth between Ray Dalio and someone else. I think he was on a podcast. I forget which one, but basically he was saying that. So Ray Dalio, of course, of hedge, what's it called, Bridgewater, the one of the world's biggest hedge funds, sort of a macro OG analyst guy and investor, and yeah, he was saying that the problem with Bitcoin is that it's not private. He sees that as one of the bigger risks. Like he said, central banks won't be using Bitcoin as a reserve because it's not private. So I mean, that's maybe a little bit different in terms of like how you would analyze this as an investment, but it may be connected.
Yeah, I mean, I think the other issue to note, at least around Zcash, is, and Vlad Kostia talks about this a lot, and Naval is hinting at it. Is it the tech around it pertains to Bitcoin, and a lot of the tech could be folded into Bitcoin, right? This is not completely incompatible like EVM technology really would require kind of fundamental changes. So when Naval talks about an insurance policy against Bitcoin, he's, I think, to my mind, expressly talking about the fact that Zcash, and this could be sacrilegious, but could be a replacement, basically, right? If Bitcoin, for whatever reason, doesn't work out, Zcash could be that fallback. I personally don't buy that exactly. I think it would be its own thing, but I do like this idea that Zcash has similar security guarantees to Bitcoin, similar technology, but just kind of
Proof
builds
of
upon
work.
it. Yeah, and Vlad has talked about how it's you could think of it almost like a test net, right? If the Bitcoin devs really kind of wanted to improve the Bitcoin protocol, here's this like amazing test net to see that this stuff can work in the wild. This new stuff can work in the wild and could be integrated into Bitcoin. So there's that argument as well.
All right, moving on from stable coins to one of the other big narratives here, which is perp dexes. So the perp dex meta isn't going away. In fact, it looks like we have a good old perp dex war upon us. So perpetual futures, or perps, have become crypto's dominant derivative product on, and decentralized exchanges are at the center of this. Let's just set the stage here with an overview of the competitors. So obviously there's Hyperliquid, the current benchmark for on-chain trading, which boasts custom-built chain and a fully on-chain central limit order book, or club. that delivers centralized exchange level precision, but it also has full auditability. Hyperliquid processes billions per day in volume. The next big up and comer here, of course, is Aster, the breakout contender. It features high leverage, multi-chain functionality, and we're going to get into this more, but yeah, has been challenging Hyperliquid in daily volume and open interest. Although, of course, there's some debate about that, which we'll get into. Then you have some of the OGs in the space, like GMX, the veteran DEX, which maintains a strong user loyalty with thanks to their fee-sharing economics and efficient V2 design on Arbitrum and Avalanche. Another OG in the space, DYDX, migrated to its own Cosmos-based chain, V4, and it offers high-performance order book trading and throughput that keeps it in the top tier. Then in the Solana ecosystem, there are Drift and Jupiter. Drift regularly hits billion-dollar days, while Jupiter's perps offer up 150x leverage and can tap into Solana's deep liquidity pools. A few others to mention: Apex, EdgeX, Sunperp, which is Justin Sun's Tron-based entry, and it's designed around ultra low fees, Sun token buybacks, and deep USDT liquidity. So that's basically the landscape. There's a lot of competitors. Things are heating up in the Perp DEX wars. David, let's get into some of the nuance of the volume numbers and open interest.
Yeah, so I mean, just set the stage and kind of the attention that this is getting. Last week, Aster, Hyperliquid, and more. Bitcoin.com news reported that Aster, Hyperliquid, and more were nearing $1 trillion in perp deck trades in just 30 days, which is crazy, right? So they had 869 billion in trading volume in over 30 days. And this, according to DeFi Llama, represents a 153% weekly volume spike. So we're getting massive amounts of attention to these perp dexes, and the volume increases are quite large month over month. This has been powered, I think, mostly by the appearance of newcomer Aster. Hyperliquid has been around for a while, and it seemed like comfortable increases month over month for I don't know, most of this year. But again, Aster coming onto the scene, presumably backed by Binance's CZ and Binance itself, has really kind of, I think, kick-started this war proper. So a couple days after that Bitcoin.com news story about nearly $1 trillion in perpdex trades, we had another story talking about the trade volume for September. And so for the month of September, there was a total trading volume surpassing 1.43 trillion, which is crazy. Month over month increase of 50% for just on-chain perpetuals. And the trading volume for September was dominated by Aster, right? Aster was the biggest part of this. Now, this is like fresh news as of this morning, but DeFi. So all this data, it comes by way of DeFi Llama, which is, I would say, the de facto DeFi platform to track on-chain
data
metrics.
aggregator.
Yeah. And they released a post last night, this morning, depending where you are, questioning Aster's the validity of Aster's data that they post. Actually, maybe I can read from it. I didn't put it in the doc, but I have it here. Let's see. Let me just read this for you. So this is coming from someone from DeFi Llama, right? We've been investigating Aster volumes, and recently their volumes have started mirroring Binance Perp volumes almost exactly. They post some charts, and they show different charts on this. Aster doesn't make it possible to get lower level data such as who is making and filling orders. So until we can get the data to verify if there's wash trading, Aster Perp volumes will be delisted. For some other coins like ETH, the correlation is more extreme, but similar patterns can be seen across all pairs. So this caused quite a brouhaha on crypto Twitter to have, I don't know, an impartial party like DeFi Llama take such extreme actions, basically kind of throwing down the gauntlet, saying we don't believe your data, and you need to.
Yeah, I don't
prove...
think anyone believes the data. So happy to see this. I mean, it's been widely speculated that Aster's volumes are, basically people points farming, wash trading to get more points for like a future Aster airdrop.
But this to me,
yeah.
Go ahead.
No, it's just that's evidenced by the fact that what people point to is open interest on Aster is 1/10 of what it is on Hyperliquid, or at least it was last time, like not too long ago.
Yeah, but like this to me though, like if you look at the charts and stuff, it's pretty extreme in terms of kind of what it. I think it. To me, it's not just that it's like wash trading. It would almost be like they're mixing data from Binance Perp volumes. Almost, it doesn't sound like strictly just wash trading. I don't know. It might be, but it sounds like maybe the two are further integrated than we thought. Right? Like it's. I saw some comments saying like, "Oh, it looks like Aster is just a front end." Kind of a front end to Binance, like a new front end, decentralized front end to Binance. So I mean, that's it's hard to say exactly, but again, as you said, no one really believes
that could be bullish if that was true, David. If Aster is a decentralized front end to Binance, you could argue that's bullish. Like Binance is just moving on chain.
Yeah, I mean the difference though is that so it's a decentralized front end. But then that means the back end is centralized, which then I think authorities would have some questions about that, right? Like usually the back end would be decentralized and the front end would be centralized. But let's see how that goes.
All right,
the war continues.
Anything else to discuss here on the Perp DEX wars before we move on to our last topic? We got two more topics here.
I think all I would say is on this is I think that we're going to see I'd imagine we're going to see like a little cool down period on this. I think we're just going to kind of settle into a cold war for a little while the people airdrop farm or points farm, and then maybe when airdrops start to happen, you might see this heat up again. But it seems like that initial kind of frenzy it might be over. That's all speculation though.
All right, let's move on to this next story. So there was a rule change at the SEC, which basically introduced generic listing standards for crypto ETFs, and not unsurprisingly, there has now been a wave of over 30 filings for ETFs in a single day, as issuers are racing to capitalize on the streamlined process. So these 30 new filings include ETFs for Aave, ADA, Cardano's token plus staking, Atom plus staking, Avalanche plus staking, BCH, CRO. The list goes on. 30 of them. The long tail of altcoins, I guess. And there's a quote here from an analyst, Nate Garachi, who says, any crypto ETF you can possibly imagine will be filed with the SEC over the next several months. You all have no idea what's coming. So crypto ETF season.
Yeah, I asked Hunter Horsley, the co-founder and CEO of Bitwise about this at Token 2049 in Singapore. I asked him, obviously, yeah, the this crypto ETF altcoin season is coming, but what kind of appetite will there be from TradFi for this kind of deluge of shitcoin ETFs? And he said, obviously we don't know the appetite exactly, but he said a good starting point is to simply look at the crypto market cap percentage of so like altcoin percentage versus Bitcoin. And he said that is probably a good starting place to get an idea for what kind of appetite you'll have. And
Okay.
I really like that. I
So
think
if
that's a
yeah,
decent
so
metric.
if the Bitcoin's currently at about 60% of the entire crypto market cap, and then Ethereum is what it's got to be at least 10%. So you're left with like 30% at most of for this long tail. And like if you look at an asset like Aave, what does that constitute? It's got to be less than 1% of the entire crypto market cap. So therefore, it would constitute less than 1% of the ETF appetite or volume, like the market's demand for this product
Yeah. But
relative to the
again,
Bitcoin version.
exactly. And then so you would see like you could then maybe take the inflows that Bitcoin's had in the past 18 months. It's like 50 billion, right? Total net inflows, 50 something billion. And then you could say, okay, so Aave is going to get whatever it is, 0.5% of that over the next 18 months. But if they were to get that, what would that do to Aave's market cap price, right? Because it's a
Yeah.
much smaller size. So again, as a starting point, I think it's a decent way to begin to approach this if you're going to play this game, which I'm not going to do. But I thought that was a good way of looking at it.
Okay. Let's move on to our last topic for the week, which is stablecoins. So
Yeah.
yeah, starting off with the stablecoin market cap.
So yeah, stablecoin market cap hit a new milestone. The total market cap breached 3 billion for the first. Is that correct?
3 billion.
3 billion.
Yeah.
Jeez. Um, Wait, no, 300 billion, right? It was 200. It was
300
two.
billion. Yeah.
Yeah,
It,
yeah,
it
yeah,
went as high as I think 304
yeah,
billion or something. It
yeah, yeah,
added
yeah.
6 billion just in the last few days.
Yeah.
So first time to break the 300 billion mark,
Yeah.
total
And
market cap of yeah, stable
this
coins.
is
Go ahead.
this is important, Graham, as we've talked about before, for a long time, for more than a year. One of the metrics that I use, and I think you use, and a lot of smart people use to measure the health of the bull market is the is the supply of stablecoins increasing or decreasing, and what is kind of the trajectory of it. And
Yeah.
while you're seeing this this steady increase, it really should reassure you that the bull market is intact and underway. And here you have a good sign of that.
Yeah, I'm just trying to get the chart right here. As you can see, in 2020 all the way through to mid 2022, the stablecoin market cap rose steadily and then fell off a cliff and was on a gradual downward trajectory through to about mid 2023, and that marked, of course, the last bear market. And since then, it's been up only. So we're nearly double the stablecoin market cap right now as we were at the peak in 2022.
Exactly. Yeah. Well on our way. The next piece of stablecoin news is about Tether and Rumble. Tether has announced a plan to integrate USAT. This is I think they've
It's their
rebranded
genius
their,
compliant
yeah.
version of USDT.
What was the name before this? What was the holding name? It was like USDT one or something like that, or is that something else?
Can't remember, but the World Liberty Financial one is USD1, I believe, right?
Yeah. Anyway, so USAT, or I don't know, USAT, is the Genius compliant version of USDT, and they're going to integrate it into Rumble and Rumble's new wallet. So Tether CEO, my good friend Paolo Arduino, I
You should
butcher that
you should
every
learn how to
time.
pronounce the name of your good friend there,
Nah,
Paulo
man.
Arduino.
Nah. Call him P Dog. He announced the strategy at Token 2049, revealing that Rumble will roll out a crypto wallet, which I talked with him about, and I talked with the Rumble CEO about, powered by Tether's technology later this year. And so this integration will bring USAT directly to Rumble's 51 million and growing active users. And most of Rumble's users are in the US, so it makes sense to have USAT integration there. Quote, the aim here is to prove how we can convert 51 million active users, mostly in the US, to use stablecoins within the US, the most sophisticated nation for financial rails, said Paolo. And this mirrors what I took away from my conversation with him, which is, again, I said this all through Token, I think, when I was talking about the Tether interview, but he is laser focused on distribution. That's the kind of the number one thing that is determining the investments he makes and the moves that Tether makes, is how to further distribute so Tether products, USDT and USAT, I guess. And so this makes perfect sense and aligns with everything that he said in my interview. Distribution, distribution,
So
distribution.
Tether's strategy is distribution. Now, I think it's a good time to bring in the post from Nick Carter, extremely well respected Bitcoiner and Bitcoin ecosystem venture capitalist now. And he also has been thinking a lot about stablecoins forever. So he's very knowledgeable in the space. And for a long time, he basically thought that it would be a winner takes most situation with stablecoins, that Tether and Circle, that they would enjoy the most distribution. But now he sort of changed his tune in this piece that he published on X, an article, and he's saying that the Tether Circle duopoly is over. There will be many stablecoin competitors, and also that over the long term, yields will go to zero. That's how I understood his thesis in the article. David, is there something you'd like to add there?
Yeah, no, not really. I mean, I think the yields will go to zero thing is more that so you'll still have yields, but the yields will be like distributed to the different players. In
Sorry,
in
that's what I meant. Yeah, the stablecoin issuer will not be just like printing money. They're going to have to distribute the yields to the
Yeah,
users. That's what I
exactly.
meant.
Yeah,
Sorry. Yeah.
yeah. So yeah, exactly. And so because of the competition, the amount of money that the issuer retains will be smaller and smaller, and you'll get these kind of cutthroat margins. And this is just kind of what happens when you have a maturing and highly competitive business sector. Um, but I think the overall take that I have though is that the major reason that you'll just see this kind of proliferation of stablecoins, and then that is going to be the future, is that you're gonna have a stablecoin for every little individual particular use case, and that one stablecoin won't be able to offer everything to everybody. But so there'll be tons and tons of stable coins that will give this particular market participant exactly what they want, and then another one for this one, and so on and so forth. And so, in this kind of way, you can't really have maybe a one or two dominant stable coins. At
Yeah,
least that's how
so
I
in the
interpret it.
back end, there will just be better tech to bridge them. You won't really know. You're just in people's accounts. in whatever, like whether it's Rumble or whatever it is in the future, people will just be holding US dollars. Like that's what it'll look like. In the back end, it'll be some sort of white labeled version of I don't know, some stable coin, and then they're going to be figuring out how to reconcile everything on the back end.
Yeah. And just a little dollar nerdiness for the people at home. This is not that different to the current system that we have now. Um, if you are in America and you have US dollars in a bank, and this is where most people have dollars, right? Um, if you're at like Bank of America, those are technically Bank of America dollars. Those are not US dollars. Those are not some like generic US dollars. Those are Bank of America dollars. Those Bank of America dollars are not fungible directly with Chase dollars or Merrill Lynch dollars, right? There has to be some reconciliation there a little bit, and those are fundamentally different things. So, for you as the user, when you send dollars from one bank to another, it's seamless and you don't care, and nobody really knows that today that those are different dollars, right? But on the back end, it already exists. They are different dollars, and that's how the current financial system works now. And so all I think what we're saying is nowadays in crypto, we know that, oh, I'm holding USDT, and then, oh, Graham wants USDC. And so you and I have to think about that and reconcile that somehow, right?
Yeah.
But at some point in the future, it'll be like the system is now, where I just have dollars and then I send dollars to you, Graham, and whatever it is that you prefer, right? Maybe you make a preference in some whatever, however you're holding it. That gets all worked out in the back end.
Yeah. Yeah. Or it's the vendors at the end who actually have to deal with it, and basically the users just have to think about dollars. I think that's probably the end state here.
Yeah.
But that'll take quite some time, I would imagine. All right, David, let's wrap it up. So thank you as usual for your insights, and thanks for everyone for joining. We'll see you next week on the weekly. Also, don't forget to check out Token Narratives, which we'll be doing as usual this Friday. That's it for us. Have a great week.
Back home. Yes.